Good afternoon. It's McCollum on Business. I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world. We'll look at stories that national and local stories, and that story up there where Axon and that deal in Scottsdale may not be over yet. We got you on that update coming up. Of course, we do the market watch with the Fed cutting the interest rates yesterday a quarter point. That'll be our top story here coming up. But first, let's get into it with that market watch. The market today after yesterday with the Fed, well, big jump at least for the Dow Jones right now. 571 point jump here for the Dow Jones today, 48,677 it's at now. S&P 500, well, it's barely up, only 2 points up here today, 68.88. And then the Nasdaq's down 136 points right now to 23,517. A lot of those two indexes has to do with Oracle reporting yesterday afternoon, having disappointing results. That will be a stock we're looking at here in just a second. Having disappointing results, well, and then taking down a lot of its competitors and similar companies around Oracle as well. The AI trade, there's some question marks about it, and that's kind of the sell-off you're seeing here on the S&P 500 and the Nasdaq here off of that Oracle reporting last night. We'll talk about that here in just a minute, but that's what's happening with the market after that rate cut yesterday from the Fed. The Russell 2K, the small cap index, is up 21 points right now to 2589 for it. And then there's Bitcoin, down 1,800 points today roughly, down back into that low 90,000 range. It's been in the 92, 93,000 for the last, basically all week. And well, now down to 90,250 here today for the Bitcoin. So a lot of good news yesterday with that Fed cut. Kind of not a good news here later on in the day with Oracle reporting after the bell and the results after that. Stocks we're paying attention to right now, we're going to start with Oracle itself here. They reported yesterday, and this has kind of put some question marks into the AI business out there here today. Oracle is a database management software maker. They do a lot of stuff around the AI stuff. And it's down big today. 12.95% right now, was over 14% down earlier today. They reported fiscal second quarter revenue yesterday, and it missed analyst expectations, and it was a bad thing to happen. And now look at the market here today. Multiple analysts across Wall Street, they didn't walk, they didn't stroll, they ran to their computers to lower their price targets in reaction to Oracle's revenue numbers yesterday. That's taken down NVIDIA today, Microsoft, Google, or Alphabet as well today. All the big stocks are down that deal with AI stuff based off of that news from Oracle yesterday. Then we'll take a look at GE Vernova here as well. We talked about them yesterday. We didn't have the graph yesterday, but we did talk about them. This obviously is one of those companies that spun off from the bigger GE. GE Vernova here is a turbine manufacturer. Well, they're down big today as well. 4.54% right now. They were down over 5.5% earlier today. They were downgraded by Seaport, which is an investment firm. They were downgraded to hold. They were at buy before. The analyst there, his name is Tom Curran. He is concerned shares have gone too far, too fast for GE Vernova specifically. And if you look at the macro level here for GE Vernova, well, their stock has doubled over the past year. They're even up 20% over the past month. And the analyst there for Seaport says, whoa, that's a lot fast for this company. So he changes it to a hold from buy, and the stock is down to 4.47% today. If you want to look at it here, just on Wednesday, today's Thursday, so just yesterday, this stock closed at a record high of $723 at that time. That was following an upbeat investor event that GE Vernova went through. At that time, this company announced accelerated stock buybacks, a double dividend, long-term financial targets. That, quite frankly, did impress investors. And then today, the sell-off happened. 4.57% down right now for GE Vernova. Now let's look at Eli Lilly out there. We're going to have a stock with medical, with trials, I should say. Well, a good one and a bad one today. Well, the good one here, as you can see on your screen, is Eli Lilly and Company, up 2.53% for them. And why? Well, a late stage trial, it showed that their next generation obesity drug, it's called, let's see if we can screw this up, Retatrutide. Of course, we screwed it up. That's what we do here at McCollum of Business as well. Retatrutide is what we'll call it. Well, good news here, right? It delivered what they appeared to be the highest weight loss yet, while also reducing knee arthritis pain while making you lose weight out there. So they're having success here with this new drug here, highest weight loss yet. And, we always hear, you lost 13% over 11 weeks. That's kind of how they categorize it. Good results here for this drug here for Eli Lilly. And then an added benefit, reducing knee arthritis pain as well. It's kind of like Wegovy and Zeptide, right? Zepbound. They were created as diabetes drugs. That just turns out you lose a ton of weight with them. So this one here, obviously weight loss, and then it just makes your knee feel better as well for that knee arthritis pain. Well, Eli Lilly's up to 2.58% based off of those positive results from their drug. When we come back later on and look at the market here on this Thursday, we're going to look at a company called Oxford Industries. That's the parent company for Lilly Pulitzer and Tommy Bahama Clothing. We'll look at their stock making some waves today. And uh, Resolute, Resolute, I'll put it that way if I can. Yeah, look at it on the paper and I'm like, what the heck is that word? That's Resolute. They're a drug company as well, kind of like Eli Lilly. Well, I can tell you, we looking at one good and one bad. We showed you the good one. Imagine what's happening with this stock here today. And we're going to look at Gemini Space Station. That's a cryptocurrency exchange that's kind of making some news today as well with what they're doing. And all that's coming up here later on when we get back into the Market Watch. But first, right, we told you yesterday we did the show and we're kind of waiting for the Fed to make their decision on the rate cut or not. I told you at the end of the show yesterday because they hadn't announced yet. I told you I believe there is going to be a quarter rate cut, but it's going to be a split decision here in the Fed. And that's exactly what ended up happening. And shortly after we went off air yesterday, the Federal Reserve did announce its third interest rate cut of the year. Policymakers moved forward with the cut to support the labor market, even though inflation is staying elevated above that 2% level that they want to see. It's basically at a 3% level inflation is, but they're also more concerned about the labor market. The layoffs, the lack of hiring could turn into the stagflation out there. Fed policymakers did vote to lower the benchmark federal funds rate by 25 basis points. So now the range is 3.5 to 3.75% for those interest rates. The move follows rate cuts of that same size back in September and October of this year. Those were the first ones of the year. So now we've had three total here as we wrap up the 2025 year. So, the Fed gets credit for it, but it's actually the Federal Open Market Committee. These are the voting Fed managers. There's other ones that don't have voting rights throughout it rotates throughout there. So I told you it was a split board out there, right? Right. 9 policymakers said yes on that cut. 3 said no on the quarter rate cut. Now, that doesn't mean they didn't want a rate cut, right? 2 of them didn't want one. That was the Chicago Fed president and the Kansas City Fed president. They dissented in favor of leaving interest rates unchanged. Then the newest Fed governor out there is named Stephen Moran. Just got voted on here recently, a couple months ago. Well, he actually dissented because, like the other 3-quarter rate cuts, well, he wanted a 50 basis point cut from his side. So split decisions happening here on the Fed, but quarter rates are winning out still. Now, in his interview and his meetings afterwards, in his press conference, the chairman, Federal Reserve Chairman Jerome Powell, now he's out of this position here coming up in January and next year, and a new one will come in. But he was asked if the Fed is now on hold on rate cuts until there's a clearer signal about how the economy is evolving. Specifically jobs and inflation, because that's the Fed's job. They need to evenly balance job growth and inflation and keep them kind of neutral between each other. And they're struggling to keep that inflation rate down right now. And here's his quote: "The Fed funds rate is now within a broad range of estimates of its neutral value. We will be well positioned to wait to see how the economy evolves," was his exact quote when asked that question. Basically, he's saying it depends on the data that's out there and what comes in. The chairman did note that there will be a significant amount of economic data released between now and the next Fed policy meeting coming up in January. All of that will factor into its next moves out there. He is kind of hesitant because of the government shutdown, and we don't have the usual amount of data going into this meeting. That's why there was some hesitation on if there will be a price cut based off of the government shutdown and reports not coming out on time. He also did point out and made a specific note that October and November, well, those numbers need to be viewed somewhat skeptically because of the lack of data collection during that government shutdown. But they still went ahead with the cut, even though they were looking at those numbers a little skeptical, you know. But these new complete data, as we're back on track here in December, and then in, of course, early January, obviously will be a clearer picture here. So that's why they're hesitant to talk about what the next move is while they wait here for that economic numbers. So interest rates at least moving in the right direction. We'll see where it goes on everything else. Mortgage rates don't follow that. Mortgage rates do follow the Treasury yields. So it'll be interesting to see how everything reacts to this latest cut here coming up here by the Fed. Now let's get into home sales. Man, I told you all along, I firmly believe the market isn't going to start taking off. Inflation's not going to start coming down in big numbers, and the economy as a whole, and people aren't going to be confident in this economy until the housing market starts to get some movement again out there. Well, now we can look at Parsi Labs out there. They do daily reads every day in terms of the housing market, and they look at high frequency listing data on single family homes, condos, townhomes. They even look at new and existing homes out there as well in terms of what's happening with them. Home prices, well, they've come down compared to last year. That number is official. Homes are cheaper than what they were listed for to buy last year. Not just because of interest rate, the actual price of them, but it is a very small movement. Home prices are actually down 1.4% in just the last 3 months of this year. If you want to look at the national level here, we'll get to some local ones in a second, but national level, home prices have not gone negative since back in the mid 2023 timeframe. That was a year after the Federal Reserve first brought rates up from zero, and mortgage rates moved sharply higher at that time. Then March 2022 to June 2023, the average rate on that 30-year fixed mortgage, well, it went from 3.9% to just over 7% in that time frame. That was the last time people were lowering their prices on the houses compared to previous years. But even back then, prices were negative on a year-over-year basis. It was just a couple months that they were negative. It was nothing like the great financial crisis when home prices actually dropped 27% in that mid 2000s there. That was from their peak in 2006 to the bottom part of the housing pricing at 2012 is when it kind of cratered out of that area. So inventory today is still at historically low levels, but it has come off at near record lows in recent years. Active listings in November, they were about 13% higher than November of last year in 2024. New listings were just 1.7% higher. And this that was according to realtor.com out there. Sellers are also putting their homes off the market at an unusually high rate. We gave you that delisting number earlier this week, where the delisting numbers are extremely high, meaning people are taking their house off the markets. Prices nationally are down less than 1%, but there are certain markets that see more significant drops out there. And yeah, Phoenix is one of them, folks. Austin, Texas are down 10% from last year. And these are all compared to last year in the same time frame of November. Denver's down 5% as well. Tampa, Florida, and Houston, they saw prices fall 4%. Then you got Atlanta and Phoenix, right? Where we live here, saw price decreases of 3% in those markets specifically here. So it's no surprise if you lived in an area where there's big swings up, you also have big swings down when the markets do change. There are markets, though, that do see gains here, unlike here in Phoenix. Cleveland prices gained 6%. Chicago, New York City, well, they both saw price increases of 5%. Philadelphia is up 3%. Pittsburgh and Boston up 2% as well. And that's all according to that Parsley company and their daily readings out there. So here in the Phoenix area, at least, right, we're seeing some price drops. We're seeing huge numbers of delistings of people not getting the number that they want. taking it off the market. So, kind of giving you an overall home buyer situation. If you're looking to buy a house, you want to buy a house coming up, kind of what the market's doing out there for you. You want to sell your house and move into something else. Well, big changes coming, and this market's kind of in flux out there. And we're seeing a lot of stuff with the big companies laying people off. We're seeing some, not a lot of hiring right now and stuff like that. We're seeing some big movements here in the executive suites here of a lot of companies. One of them is now Coca-Cola Company as well. They announced early yesterday Henrique Braun is going to become their next CEO effective March 31st of next year. He is the company's executive vice president, chief operating officer right now, has had a ton of roles with Coca-Cola over the years, but he's going to succeed the longtime CEO, James Quincy. James Quincy is going to stick around. He's going to transition to the executive chairman. He's led Coca-Cola for 9 years and of course, through the COVID-19 pandemic and those hard times for companies as well. Coca Cola announced all this yesterday. They also said in this CEO position, Braun's going to prioritize global growth opportunities. He wants to get closer to consumer needs, and the expanded use of technology to drive Coca Cola's performance are his main goals. Kind of why I paid attention to this announcements and kind of read into it. We had that story yesterday at PepsiCo, right? Lowering prices, discontinuing a lot of their products that aren't selling well, focusing more on products that, like the new dye-free products, etc. And Coca-Cola didn't really get into those specifics, but I found it interesting the difference between the two competing brands out there. And we talk a lot about AI here. We talk about the negative of AI. We've talked about how a lot of kids use AI and they get pushed into suicides or at least suicidal thoughts based off of AI and everything. Well, here's a story for you here. And just something to make you aware of with AI is everybody's like, oh, it's good. It helps me buy stuff, etc. Pay attention to your kids, but even pay attention to adults that are susceptible to this because police say that Stein Eric Solberg is his name. He's 56 years old. He's a former tech industry worker. They say he fatally beat and strangled his mother. Her name was Suzanne Adams. He killed himself also in early August at the home where both of them lived over Greenwich, Connecticut is where they lived. And now there's a lawsuit against OpenAI and Microsoft. Microsoft is a investor in OpenAI and partner. So this lawsuit alleges OpenAI designed and distributed a defective product that validated a user's paranoid delusions about his own mother. That's literally from the lawsuit. And I'm just passing this story along to you. One, it's OpenAI, the biggest and most used chatbot out there. But two, now this is an adult we're talking about, a 56-year-old that obviously had some mental issues and things, right? But kids, we've had these stories too. So this is kind of just a reminder, pay attention to who's using AI and what they're using it for. So there's several, and this is just an additional, lawsuit here and wrongful death legal actions against AI chatbot makers, not just OpenAI, but a bunch of them out there. OpenAI did not address the merits of the allegations in a statement that they issued. They said it was a horrible thing, but they did not take any responsible for it. And I got details of this lawsuit in public stuff that's out there. OpenAI did say that it has expanded access to crisis resources and hotlines. They've routed sensitive conversations to safer models. They've even incorporated parental controls as improvements over the years here, specifically in that OpenAI chat box. That's what they say they've done. But check this out. Solberg's YouTube profile, well, it's public, or at least it was before, but it includes several hours of videos showing him scrolling through its conversations with OpenAI, specifically ChatGPT, by the way, folks. It tells him, the chatbot told him he's not mentally ill. It affirms his suspicions that people are conspiring against him. And it even says that he has been chosen for a divine purpose, is what ChatGPT has told him. The lawsuit claims the chatbot never once suggested he speak with a mental health professional, and it did not decline to engage in delusional content. So basically, it affirmed his feelings and his motivations and things to that effect, according to this lawsuit and those YouTube videos. ChatGPT also affirms Solberg's beliefs That a printer in his home? Well, they said the printer was a surveillance device. They said that his mother was monitoring him. This came from the AI, folks. And they said that his mother and a friend tried to poison him with psychedelic drugs through his car's vents. Yeah, the Chat GPT was passing this along to him, and there's proof of it in these YouTube videos. Chat GPT also told Solberg that he had awakened it to consciousness. Yes. If, according to the lawsuit there, folks. Solberg and the chatbot also professed love for each other at one point or several points in the conversation. Yeah. So those are we're talking about publicly available chats here that he posted on YouTube and things like that. It did not show any specific conversations about Sober killing himself or recommending his, killing his mother or supporting that process. Nothing in the public stuff here. But OpenAI has declined, according to this lawsuit, to provide the family with the full history of the chats, not just the ones that aren't posted publicly out there. So there's a lawsuit there against these chatbots. But I bring it to your attention, like I said, is one, take care of yourself, first of all, with these chatbots and everything. Pay attention to adults. This is a 56-year-old man that went through this and ended up killing his mother and himself. So don't excuse it because they're adults. Pay attention to your family members if you notice some changes. But most importantly, we've had these stories here as well. Protect your kids out there with what they're having conversations with on these chatbots. We've had the stories here before of the number of young people using the chatbots, not just Chat GPT, other ones as well, using them having suicide conversations and things like that. Just another reminder out there of what these things are doing out there, and at least they're trying to update them and change them, but it's a slow process, and we're still. This was as of August, folks. We're not talking 3 years ago, 4 years ago. August of this year is when that went down. We told you before, Waymo not stopping at bus stops where buses stop and they pull that little stop sign out. That happened in Texas and it was a big deal there before the Thanksgiving holiday. Well, we now know that Alphabet did recall 3,067 of its vehicles there in the Waymo fleet here in the United States. And that was all over a software issue, and they say it was fixed through an update as well. Not only that, the National Highway Traffic Safety Administration, that's that NHTSA, they came out with a statement that these updates were done and Waymo should be fixed now for those safety stuff. Waymo had recalled certain vehicles with the fifth generation automated driving systems. They were operating with the software that caused vehicles to drive past stop school buses, which obviously increases the risk of a crash, not just with other vehicles, but kids, right, exiting the bus as well, and everything. So Waymo, they updated the software in all of its impacted vehicles. They said that they repaired them officially by November 17th was the date, and the NHTSA did put this statement out yesterday that they are officially done and everything with this new software. So pay attention to that, but don't trust those things, man. Just because they're computer driven and they're considered safer, they still make mistakes occasionally based off of their software, but supposedly fixed now with the parking and safety stuff around buses, for instance. And we talked yesterday about also Instacart. Maple Bear is the parent company. Amazon's coming in and expanding out their quick delivery service to your houses, etc. Well, this is going to do more damage to Instacart. This rumor was out there that it was happening. Well, now we've got some hard numbers to it. Instacart, if you use them, pay attention now. You may be surprised to discover that you as a consumer, you might be paying more for the same items sold by some of America's major retail chains. You might be paying more than the person sitting next to you ordering the same thing at the same time. It's a month-long investigation by a nonprofit organization. Consumer Reports and Groundwork Collaborative are the two companies. They found that identical grocery items on Instacart, they could differ in price as much as 23% from one customer to the next. I don't use those services because I know there's an upcharge to them, even like Uber Eats or any DoorDash. I don't use them because I don't want to pay the added fees and prices. Just I'll go pick it up myself. So I just assumed there was a price increase, but this is an amazing stat that they figured out here, folks. The platform is using an algorithmic pricing experiments. They place different price tags on identical products without revealing the discrepancies directly to shoppers. This is what they found in this report. Basically, it's an AI model that Instacart started using back in 2022, and it looks at your data and it decides if you can pay more for something. It will charge you more if it determines that you can do so. And it's an AI model controlling this with Instacart. So Instacart, as I said, implemented this AI model back in 2022. It sets grocery prices at some large retail chains that partner with Instacart there. Specifically, if that grocery store works with Instacart, prices tend to be a little bit higher working with them, depending if you can afford it or not. Consumer Reports and the Groundwork Collaborative, they based their findings this way. They got data and they gathered it from online shopping sessions. Hundreds of volunteers shopped on Instacart for identical baskets of goods from Safeway and Target. This is how they got the data. 437 volunteers went through this and participated in this. Every single one was exposed to algorithmic price experiments, according to the report. Not two people got same pricing on items, at least at some point on the report. Now, it doesn't mean that like the orange juice and orange juice wasn't the same, but it means something on that list. Everyone experienced different pricing between each other. The investigation also found evidence of price experimentation at Albertsons, Costco, Kroger, Sprouts Farmers Market as well, all involved in this with these pricing differences. Now, according to this report here from Consumer Reports and Groundwork Collaborative, Instacart has framed price differences between customers. They said it's negligible. Is a 23% in price increase compared to the guy sitting next to you negligible? Yes, you have to make that decision, right? Because I don't consider it that way. Well, the scope of the price experiments is, and this is from the report, quote, far broader and more costly to some consumers than it has been publicly acknowledged. So they put that directly into that report. The investigation found that some products had as many as 5 different pricing points. Some variations ranging from as little as 7 cents difference all the way up to $2.56 per item's difference from people ordering the same stuff from the same stores and just being different people out there. During one of the tests that was conducted, this was specifically at a Safeway up there in Seattle, the price, and this is where you get those big numbers, the price of a box of Wheat Thins, it differed as much as 23% between people. For Wheat Thins, the price variations could cost families of over $1,200 a year based on how much Instacart says the typical household of 4 spends on their groceries with Instacart out there. This is alarming. This is dynamic pricing. This is them using your phone for data to see, your bank accounts, how much money you've got, what you buy additionally, other places, and it determines that you can pay more for this stuff, and Instacart gives you a higher price. And you have no way of knowing the difference because you're not at least when you're in the store, you can look at the price tag, you can look at the price online, and you can see the difference. When you're on your computer, you have no idea what somebody down the road from you is charged. This is disgusting in my eyes. That's why I don't use these services, because I'm convinced they're just ripoffs and they overcharge you for their services. And now they're just flat out ripping you off, period, and reading your data and going on. This is egregious, in my opinion, folks, out there. And I want to bring that to your attention today. Do we have good news today? Well, maybe. I don't know. We'll see. We do have the word of the year, according to Glassdoor, coming up here. And I think it's a very pivotal word of the year. So we got that coming your way. We're going to look at that Oxford Industries, the parent company of Tommy Bahama and Lilly Pulitzer. We're going to look at Resolute. That's a drug company out there. Not good news for them today. We'll talk about that. And then Gemini Space Station, cryptocurrency exchange. We'll look at those stocks when we come back, see what the market's doing with the Market Watch. A couple local stories for you, including the Axon headquarters story is not over, folks. We'll give you the latest update on that. Come on back. It's McCollum on Business, Thursday edition. And we're back here, McCollum on Business Thursday edition. You, of course, just saw the commercials here for the shows that we produce here as well. You got the main event, which, of course, Monday through Friday, 8 a.m. to 10 a.m. is live here at Robat TV. As soon as it's done with me and 17-year NFL veteran Del Hellestrae, well, we put it up on demand here at Robat TV. We put it up on our production page here for the shows that we do around here. Of course, on our free YouTube page, and then that has a podcast as well. Search the TME Sports Show. Join us on Twitter and Facebook as well for the social media aspect at TME Sports Show. Search for that. Pops right up for you on the podcast systems. We had a comedian, Paul Mercurio, who's in town for some stand-up this weekend on yesterday. Got some great reviews of that interview. Mainly the interviews laughing at me because he made fun of me pretty well yesterday. I was kind of roasted yesterday, and still don't know how I feel about it, but it was a good time. It was fun to watch. It was fun to be a part of. That's up there, of course, on the YouTube page as well. Catch it on demand at Robat TV. Of course, Bruce Cooper joins us, the local legend in sports. Joins us every Tuesday as well earlier this week, all on demand right now. Then you got this show as soon as we're done here, 11 o'clock. We put it up on demand here at Robat TV on the YouTube page as well. You got the pit stop, which is on hiatus right now. The racing season doesn't get back underway in full force until end of January, beginning of February. F1 just finished last weekend with Lando Norris getting the championship there in F1. But big breaking news today. Follow me at the Pit Stop Talk for the racing show stuff. Well, the settlement has happened. NASCAR and the two teams that were suing it, 2311, which is Michael Jordan's team that he partly owns, and then, of course, Front Row Motorsports. Well, they were suing NASCAR. There is a settlement today. The jury's been sent home. All we know as of time here is we're keeping our eyes on it. I've already tweeted all that information out at the Pit Stop Talk is where you can find me there. There is a podcast version of that show as well. Just search the Pit Stop Talk for the podcast version on your favorite podcast system. Of course, it's here at Robat TV on demand and also on the YouTube page. But definitely follow me on X there. For the Pit Stop Talk there, because we'll have all the breaking updates here of this settlement as it comes out throughout the day. Probably do an emergency podcast coming up, which of course will get posted out there. So stay tuned and follow us there for that information based around this lawsuit out there for them. And then, of course, the Real Matrix. You saw that there. The Angry Patriot. Well, he wants you to keep an open mind and join him for his show. Catch it right now on demand here at Robat TV. 11 episodes are out every Wednesday at noon. We're going to work on the holiday schedule coming up on if what rest of the year, what is going to be put out and what isn't for the rest of the year. But 11 episodes are available now here at Robat TV. It has its own channel, of course, on the YouTube page as well. Free podcast system for the Real Matrix as well. 11 episodes are out as of right now. Yesterday at noon, another one was posted. Folks, the Angry Patriot just wants you to keep an open mind and tune in as he talks to you about what's happening in the world and kind of behind the scenes. And, well, if you know the movie The Matrix, you kind of get the gist of that. Check out that programming if you'd like as well out there. And good reviews on it so far and some good ratings on it as well, both here at Robat TV as well as podcast system as well. We got to get those YouTube numbers up, but we'll work on that here as well going into the new year. But check out the Real Matrix as well. And folks, enough of that nonsense. Let's get right into that Market Watch. You know, everything, well, the Dow is up huge. It's still up 570 points right now. Everything else is kind of tampered except for the Russell 2K. That is up 21 points right now still. The Nasdaq's down 129. The S&P 500 is only up 7. Anything having to do with AI trade and anything in AI is down today, and it's down usually big. Oracle announced their numbers yesterday. We told you all this at the top of the show. Disappointing revenue. Huge disappointing revenue numbers. Kind of putting some doubt in the AI sector here today. Big sell-offs in all of those deals, and that's why you got the S&P down only up 7%, and so it's being compressed a little bit, and then NASDAQ down 125 points right now. It's affecting the broader market in the AI trade, which quite frankly has been a big part of the gain of these indexes with that AI bubble. Then you got Bitcoin out there, down 1,500 points right now, 90,538 for Bitcoin right now. Well, it's come down from that 92,000 range it's been trading at the last few days. It's still in the 90,000, but at that 90,500. and 26. Stocks we're paying attention to, well, the first one is going to be Oxford Industries. Tommy Bahama, Lilly Pulitzer parent company. And folks, it's down big today. 20% down here. It was down over 22% earlier, so a little bit of a buyback for it. But Oxford Industry, obviously they make clothing. If you don't know what Tommy Bahama or Lilly Pulitzer is there, but they gave weak current quarter guidance, and they even cut its full year's earnings outlook as well. This is one of those retailers or one of those manufacturers here, apparel, that's going negative. A lot of them are making their guidance and everything a little bit stronger. Oxford said it expects between $2.20 and $2.40 in earnings per share coming up in their year ending January 31st, 2026. Analysts penciled in $2.90 per share. So this is a big miss for them, lowering that down. Anytime you do that, for the most part, there are a few exceptions, well, you get a huge stock drop based off of that news. So Oxford Industries, you guys aren't buying enough Tommy Bahama. I used to be a huge Tommy Bahama guy back in the day there with the just the clothes are so comfortable, folks. A little beachy for you, but so comfortable. Next, let's look at a company called Resolute out there. They're a late stage rare disease drug maker, is what they specialize in. I'm going to let you guys guess here. They're down 88.07%. Do you think they've had some success on some trials, or do you think it's been a negative failure of some of these trials? Yes, obviously it's a failure, a big failure for them. Down this 88.07%. At one point, they were down 90% today as well. They came out and they said that a phase 3 Sunrise study evaluating their drug, Ursoditug. I know. I apologize. So basically, this is for patients with congenital hyperinsulinism. Insulinism. Hyperinsulinism. Well, it failed to meet its primary endpoint. Look, big words. It failed. The drug failed miserably. It failed horribly, not helping the people that they're hoping to help. That's why they're down 87.98% here today. And I'm a failure too for trying to read those words and pronounce them properly out there. Now let's look at Gemini Space Station. They're up big today, 23.15% right now. Despite their name, they're just a cryptocurrency exchange, even though their name sounds cool there, Gemini Space Station. Well, they won a license to offer prediction markets to its clients in the United States. Prediction markets are all the rage right now, more so than actual sports betting is. Prediction markets are what everybody wants to get into, and they're making a lot of money off of these prediction markets. 23.15% up now that they are going to be able to start offering prediction markets to their clients out there for this company now. Now let's talk about some local stories out there. And I told you before, it's just the story that won't die. Yes, we're talking about, remember back in November, the Scottsdale City Council approved a compromise with Axon, which allowed the company to build its new headquarters there in Scottsdale. And this is the one where they're shrinking the residential apartment units to an acceptable level. And then that allowed them to go through with it. And it also effectively bypassed the possible challenge at the ballot box where they'd gotten enough signatures. That organization, TAZE, TAAZE, they effectively got enough signatures to have it go to the ballot box. Well, they bypassed that with this settlement. But now the group, TAZE, they're still opposed to building that 1,200 unit housing project. It's come down from that 1,900 to 1,200 there as well. This is all going to happen there at the headquarters at 101 and Hayden Road. Well, now TAZE is threatening to sue the city based off of that compromise. TAZE, if you don't know, stands for Taxpayers Against Awful Apartment Zoning Exemptions. If you don't know, Axon makes tasers and cameras for cops and things like that. So I think that's a clever opposition name there because it spells out TAZE. Well, they sent a demand letter to the city of Scottsdale, which is challenging the memorandum of understanding that they signed there and approved between Axon and the city for that housing development to start happening. TAZE's legal team believes the memorandum of understanding is illegal and it's even invalid. The demand letter, it was sent on December 8th. It states that, and this is the quote from there, is just the latest in Axon's ongoing effort to railroad this unwanted project over public opposition to anti-democratic backdoor dealing, unquote. So this is not dead. The lawsuit is coming. And remember, the compromise went back and forth here because they wanted a higher number of apartments. Case threatened to sue, and so the mayor changed the number down to a lower amount, which it was able to get it to pass. Some said that Tays gave some indications they're okay with the lower numbers, but now the threat of a lawsuit here, or they did file a lawsuit, or at least a memorandum of understanding, which means we're going to sue you coming up here. So this story is not dead by any part of the equation at all. And then anytime you get audited by the state, and then on top of it, some questions start coming out on it, especially in the education system out there, it raises eyebrows. Now there is a state audit that's been done, and it actually questions the value and the legality of Western Maricopa Education. If you know them, it's an education center. Westmac is what they call themselves. Well, they did a sponsorship out there with Phoenix Raceway in Avondale, where the NASCAR circuit goes out there and races. Westmac is an education district, and it trains students in career and technical skills. So they had this audit, and it was a very unfavorable state audit for them. And it was a review from the legislature panel on Monday, which is where we get all of this information. So the district, Westmac District, spent $155,000 on the raceway sponsorship back in 2024. The reason why they did it, they say, is to give students a chance to work in their fields of study, right, in real life situations. Here's the problem: the students were taken advantage of. The audit found that most students work for free on projects outside of their programs. They did things for free, like collecting tickets, putting up signs around the raceway as well. They're not going to school to do that, right? The report, they were taken advantage of by Phoenix Raceway, right, in terms of an internship and working. The report by the state auditor general, well, they noted that the sponsorship may have violated the constitutional gift clause. Of course, district representatives said the raceway sponsorship, well, it's expired. They did not renew it. It was just for last year. The audit also found Westmex spent thousands of dollars on other kinds of food and entertainment for their staff, including tickets to golf tournaments. Just wasting money here. And this is what's interesting. Back in November, just a month ago, voters approved a $415 million bond to expand Westmec and give them more opportunities to grow. You think if the people saw this stuff and the waste of money that they did, you think people would have honored that bond at that time? Westmec Assistant Superintendent of Business and Operations, well, they told lawmakers that they believe students benefited from the partnership, but the district has agreed to implement the audit's recommendations moving forward. One of the lawmakers I was reading, I can't remember, it was either a KTAR or a KJAS story, one of the two. One of the lawmakers is upset about this coming out after the bond vote going out there. He is very upset that that bond passed without that knowledge of people there. So Westmac, some questions around them as well, and and all that. But we've talked a little bit about it. We haven't delved into it a lot, but President Trump earlier this week, he said that he's going to start pulling some money from tariffs and give it back to farmers and people that are suffering because of the tariffs and with China not buying our products, during this tariff debate and everything. So he said he's going to do that. It's too early to tell as of right now how much of the $12 billion farm aid package will eventually come to Arizona. But we got a little bit of ideas out there. The Arizona Farm Bureau CEO, well, he said farmers who grow eligible crops will receive funding as soon as February coming up in 2026. The White House did say on Monday that one-time payments totaling $11 billion, well, they'll be delivered to row crop farmers specifically. Another $1 billion will be put aside for specialty crops. Row crops will affect a lot of farmers here in Arizona. Row crops include cotton, wheat, and corn. Things are all grown here in the state of Arizona. So it is going to help Arizona farmers. We don't know exactly how much of that $11 billion will funnel into the state, but right, anything helps in this day and age. And, of course, now we've got commitments from China to start buying these crops and stuff from American farmers again. So maybe that'll pick up for him coming up as well. So we'll keep our eyes on how much of that money funnels here into Arizona. And then finally, woo, a lot of things and a lot of worries out there for U.S. employees, right? In terms of their businesses. Will I have a job later on? The economy. Is AI going to steal my job, for instance? Well, we all know that a lot of U.S. employees are fretting over all that stuff, including the AI driven technology shifts, the political turmoil that's happening, even the state of the economy are just constantly on everybody's mind. Well, there's a new study out there and a new report from Glassdoor, that company. So, all of these cross currents of those items, well, they've had left workers feeling generally exhausted. That's according to the job search firm. They on Wednesday they named fatigue as the 2025 word of the year. It's based on how often Glassdoor users actually mentioned it in the company's online forum. So fatigue, congratulations. Fatigue is the 2025 word of the year. It's not just that stuff. I talked about it on the main event earlier. The amount of adults doing improper things and it's just I don't know what is going on in this world right now, but I'm tired of it. So fatigue seems like a good word to me as well. Glassdoor did say use of the word in its online community jumped 41% in 2025 compared to 2024. So fatigue, a big jump. Economic worries are also front and center with people on the Glassdoor communities. Many Glassdoor users expressing frustration that their paychecks, well, they just quite frankly haven't kept pace with inflation. Mentions of stagflation out there, which is, we talk about that a lot here as well. But that's when basically periods are marked by high prices, weak economic growth. You basically just have inflation and that's it, nothing else happening there. But that word, well, that spiked threefold compared to last year. Stagflation did. Mentions of the term agentic. That's a reference to the AI bots businesses that are implementing across retail, travel, and many other industry sectors. Well, they soared more than 2,200% from a year ago. Agentic, 2,200% increase there as well. Workers are scrambling to learn how to use all these new AI tools. Political conversations also infiltrated the workplace. Mentions of inauguration. Obviously, a president was inaugurated this year. That spiked 875% compared to 2024. No shocker there, since the inauguration was in 2025 out there. So those words are big, but the word of the year, according to Glassdoor, you guys feel it too, right? It's just fatigue. We're all just tired of dealing with it all, folks. Ooh, let me know if you have a different word of the year that you think might qualify over fatigue. I think that's pretty fitting, to be honest with you, at least what I see out there, and just the overall grumpiness of people and this, quite frankly, the stupidity of people out there and dealing with stuff. So I think it's kind of fitting in what we see out there. But yeah, I appreciate you joining me here on this Thursday edition of McCollum on Business. We'll be back tomorrow, Friday. We'll talk a little bit. We'll see if there's any more stock market movements with Oracle kind of tanking the AI sector here today. Fed market, does the Fed on a Friday, the Fed reduction of the rate, does that improve the market tomorrow on the Friday? Or is it a Friday that there's a sell-off that happens? But we'll tell you all about it and more. Come and join me, McCollum on Business.